If you're making $300,000 a year or more, you're probably working 3 to 4 months every year just to pay your taxes. Another way to think about it is, you're essentially giving up your entire paycheck for the first 3 to 4 months of the year before you keep anything for yourself. And while you might think that's just how it works, the truth is, your income is taxed at the highest possible rate with almost no advantages. And most high-income earners never question this. They just assume that's the cost of success. It's not. My wife and I are both physicians. We used real estate to legally pay zero in income tax for 7 years. And over the last 8 years, we've taught over 4,500 high-income earners how to use real estate to reduce their taxes legally. So in this video, I'm going to show you why taxes make it hard for high-income earners to get ahead and what you can still do in 2026 to change it. Because here's the part most people miss. 2026 is a narrow window. The tax rules right now create a unique opportunity and most people won't realize it until it's too late. By the end of this video, you'll understand, number 1, why high-income earners are the most taxed group, number 2, how the tax code actually works, and 3, how to start using it instead of fighting it. But before we get into what you can do, let me show you what it's really costing you. That's over $100,000 a year going to taxes. And another way to think about it is, what is that actually costing you in your life? For us, we used to think of it in terms of hospital shifts. If you're making about $1,000 per shift, that's 100 shifts, 100 extra days of your life just to make up what you're paying in taxes every year. And once you see it that way, that's the system quietly taking your time every single year. Because now, it's not just money. That's nights, weekends, and time away from your family. That's saying yes to work when you want to say no. That's time you don't get back. And on top of that, you don't even control where the money goes. You're writing 6-figure checks every year and hoping it's being used well, but with zero control over the outcome. And it's not just 1 year. If that number is $100,000 a year, over 10 years, that's $1 million. I've been there, and I know exactly what that feels like. You work incredibly hard, you go through years of training, and you sacrifice time, energy, and weekends, sacrifices most people will never understand. And you get to a place where you're finally earning a lot, only to realize a huge percentage of what you make, you don't actually keep. At some point, you start asking yourself, is this really the best I can do? And this is where most people take a wrong turn. This is where most people completely misdiagnose the problem. What most high-income earners do is try to solve this by earning more. They pick up more shifts, see more patients, and take on more responsibility. But the system is designed so that the more you earn, the more you're taxed. Now you're working harder, but it doesn't feel like you're getting ahead faster. That's the trap, and it's a frustrating place to be. On paper, everything looks great, but in reality, it doesn't feel like freedom. So if earning more isn't the solution, then what is? At some point, the question has to change. Instead of figuring out how to make more money, you need to start asking, how do I keep more of what I already make? Because the tax code isn't applied evenly across the board. It rewards certain behaviors. It rewards people who invest. It rewards people who own assets. It rewards people who create economic activity. But if all of your income comes from your job, especially as a high-income earner, you're in one of the highest tax positions possible. And you're not doing anything wrong. It's just how the system is set up. So if you want to start taking advantage of how the system is set up, instead of just being a cog in it, you have to learn how to do that. And one of the best ways to do that is by owning assets that let you take advantage of the incentives built into the tax code. These are the same kinds of incentives that high net worth individuals use to build wealth over time. When you start adding the right types of assets, you're not just earning income from these assets, you can actually use them to reduce the taxes on your W-2 or 1099 income. And this is where things get really interesting, because there are very few assets that can actually do that. And this is something that's actually pretty unique to the US tax system. Most people don't fully understand how it works. One of the most powerful examples of this is short-term rentals. Now, when people hear the term short-term rentals, they think Airbnb. They think about guest complaints. They think about something that's going to take a lot of time. But that's not really the point. The reason short-term rentals are so powerful is because of how they're treated from a tax perspective. When you buy real estate in the US, you're able to depreciate that property, which means on paper, you can show a loss even if the property is actually making money. And with short-term rentals, if you meet certain criteria, those losses can potentially be used to offset your W-2 or 1099 income. That's the part most people don't realize. So instead of just making money from the property, you're using that property as a tool to reduce the taxes on the income you're already earning. And when you combine that with cash flow and long-term appreciation, it becomes a very different type of asset. Now, this doesn't happen automatically. You have to do it the right way. You have to buy the right property. You have to understand the rules, and you have to work with the right professionals. You'll want a solid asset protection plan in place. You'll need a great real estate CPA. When it's done correctly, it can be incredibly powerful. But there's one thing that could still ruin all this hard work: timing. Timing matters more than most people realize. A lot of people think about taxes after the year is already over, but by then, most of your options are gone. If you want to change your outcome this year, The decisions have to happen before December 31st. But here's the part that doesn't get talked about enough. It's one thing to understand the strategy, it's another thing entirely to actually execute on it. Buying a short-term rental isn't just about closing on a property before December 31st. You have to find the right market. You have to buy the right property. And you have to run the numbers correctly. And you have to make sure the deal actually works. Because if you don't do that, you can very easily end up with a property that doesn't cash flow, or worse, a property that loses money. And now instead of solving a problem, you've created a new one. So this isn't just about taking action, it's about taking the right action. And that's where most people get stuck, because this isn't something you just figure out overnight. This is a skill, and it's a learnable skill. We've now taught over 4,500 high-income earners how to buy cash-flowing real estate. People who started exactly where you are right now. Busy, no experience, full-time careers, which means this is very doable. But you do have to approach it the right way. And once you understand how to evaluate deals properly, how to choose the right markets, and how to set things up the right way, you can get very good at this. At this point, some of you are probably already thinking, this sounds good, but it's probably not for me. Maybe you're thinking you don't have the time. Maybe you're thinking you don't have the money. Maybe you're thinking this sounds too complicated, or that it's just too risky. Those are all valid concerns. Almost everyone we teach had those same thoughts when they first started. Let's take a step back for a second. You clicked on this video for a reason. You just paid 6 figures in taxes, and you're not looking for a way to work harder. You already work hard enough. You're looking for a smarter way to do this. A way to generate income that's treated more favorably from a tax perspective, and a way to potentially reduce the taxes on the income you're already earning from your job. A lot of people think they don't have time, and that's a valid concern. You're already working a lot. The last thing you want is another job. But this isn't about adding more work. It's about creating leverage. With the right systems and the right team, many short-term rentals can be managed in about 30 minutes a week. And over time, you can become even more hands-off. Another concern is risk. And this is where I think people look at it the wrong way. Yes, any investment has risk, but relying on a single income stream, especially in fields like medicine, isn't risk-free either. Reimbursements are constantly under pressure. Compensation models change. There's no guarantee your income continues to go up. And in many cases, it trends the other way. And it's not just medicine. When you look at what's happening with AI, fields like law, accounting, and other high-paying professions are starting to feel that pressure too. We have a friend who's a CPA. He makes over 7 figures a year, and he doesn't see AI disrupting his business despite all the warning signs. So the question I think is worth asking isn't, is this risky? The question is, what kind of risk do you want to take? The risk of doing something new, or the risk of staying in the exact same position year after year? Another common thought, I've never done real estate before. And that's actually the norm. Most people we work with had 0 experience when they started. The goal isn't to become an expert overnight. It's to follow a proven process, avoid common mistakes, build confidence as you go. Because the biggest mistakes in real estate don't usually come from learning, they come from guessing. If you're making $300,000 a year and losing $100,000 of it to taxes, that's not just a tax issue, it's a strategy issue. And the longer you wait to fix it, the more expensive it becomes. Because every year you delay, you're effectively choosing to overpay. Now, if you want to learn how high-income earners are using short-term rentals to create income and reduce taxes, and more importantly, how to actually do this the right way, the next step is to book a call with our team. On that call, we'll walk you through your situation, help you understand what this could look like for you, and whether this strategy actually makes sense based on your goals. If that's something you want to explore, you can use the link below to book a free call. At the end of the day, the goal isn't just to make $300,000. It's to actually keep more of it and use it to build something that gives you options. Thanks for watching, and I'll see you in the next video.